Good morning. Welcome to Automotive EV. My name is Peter Wooding, and I'm delighted this morning to be joined by Adam. We'll keep it into our first names. Who's Managing Director of Romotion. Adam is going to be looking at the outlook for EV and the battery market, and he's going to outline the key things that we should be looking out for in 2021. Which is a pleasant break as well from the other things we're always looking out for in this extended 2020. So thanks for joining us, Adam. Welcome, and I'll now hand over to you.
Okay, thank you. Just share my screen. Okay, so hopefully you can all see my screen now. First thing to say is thank you very much to Peter and his team for having us on. It's always a pleasure to work with you guys, and yeah, it's good to be back in 2021 to talk about the year ahead. Now, I mean, the EV market in 2020 was probably, if you're looking for bright points in the year, was probably one of the brightest ones, in that we saw a significant expansion of the market overall, and we expect actually that 2021 will be an even better year. I'll get into reasons why that is shortly, and also the character of that as well, rather than just the outline. But just to say, those of you who don't know Romotion, we are a research and consulting house. We're based in London, but we have a team in Asia, in North America as well. And our key offerings really are three things on a regular basis. We have what we call our membership platform. On there you get sales numbers, analysis that we do, some news stories that we do about the EV and battery markets, and also charging as well. Have all our videos and presentations on there, so this presentation will be loaded up to there as well, at least the PowerPoint will. And also it's a place where our subscribers will now go to pick up their reports when we release them. On a monthly basis, we put out our assessments. So currently we have two. One is our monthly EV battery chemistry assessment, and we also have our EV charging assessment as well, which looks at both the demand side and the supply side of the charging piece. Those assessments are based on model-by-model analysis, and then looking at the sales data on a model-by-model basis. We have a database of well over 1,000 vehicles now. We run the monthly sales data through that database, and it gives us aggregations for things like pack size, battery chemistry share, obviously vehicle sales, charging speeds, and that can all be broken out by region and so on. We have a number of databases we also produce from that as well, which are a premium product, but are on offer as well. And then on a quarterly basis, we do our forecasting. So currently we have a forecast for EV and batteries, and then also a global charging outlook. That global charging outlook is done by country. It can be broken out by region or country, and it can be broken down as needed. And then we also have our energy storage forecast as well. So that's looking at grid and behind the meter scale battery storage as well. That's been released this year. So our first issue is out now. And that's been well received already. So, coming to the meat of the presentation, obviously to look forward to 2021, you have to do a quick look back to 2020. At the moment, all the sales data is in for November. A lot of it is now in for December as well, and that's been loaded up to our membership platform. But really, the year-to-date numbers for November give you a good flavour of what's happened. The key thing to think about in 2020 is the fact that Europe drew almost level, and some months was ahead of China in terms of overall battery electric and plug-in hybrid electric vehicle sales. This chart shows you passenger car, which is the vast majority of the market. Sometimes I'll be speaking about passenger car only, and sometimes I'll be speaking about all vehicle classes. I'll let you know when that is. That's crucial because China has really dominated this market since its inception. In 2018 and 2019, it was roughly half the market, and then Europe and the US and Canada had an equal share thereafter, about 25% each, or just under. This year's really changed, and that's partly a result of government policy in Europe, and also a lack of government policy in China for this year. And that has actually shaped the types of vehicles that are being released, and it shaped the battery demand as well in terms of chemistry and pack size. The reason why it's done that is because in China, about 75 or 80% of the vehicles sold are battery electric in any given month. In Europe, the split is roughly 50-50 between battery electric and plug-in hybrid electric. And that has implications for both pack size and chemistry, and we'll deal with both those points later. The increase in those sales, I mean, what this chart shows you is the rate of penetration up to November versus 2019. So what you can see is that in the European markets, there's been a significant uptick in virtually every European market versus 2019 in terms of the rate of penetration. Now, of course, part of that is down to the fact that the total vehicle market in 2020 was relatively subdued because of COVID, whereas the EV market continued to expand. And we saw extraordinary levels of growth, 200% growth in some markets in 2020, obviously from a low base, but still. That wasn't the case in China, and it wasn't the case in the US. And I'll address the reasons for that shortly. Primarily, actually, the reason why the European market exploded so much in 2020 was, at least in part, due to COVID, because COVID legitimized government intervention in these markets in a way that wouldn't have been possible without it. So key markets in Europe, obviously Germany, France. Germans have a maximum EV subsidy now of €9,000. That's not applicable to all vehicle purchases, but it's the maximum you can achieve. In France, that number is 7,000. Both of those subsidies were increased this year as part of COVID relief packages. That had a massive boost on the market. Also, in those markets as well, we saw a greater range of vehicles being released and some very high quality vehicles, the ID3, which had very, very large order numbers before it came out in Q4. And you know that really stimulated the market in Europe this year. In China, if you're following this market, you'll probably know that in China in 2019, the government halved the EV subsidy that was available from June, and you saw a massive drop off in sales in the second half of 2019. That EV subsidy was due to be phased out over the coming years, but the government have now extended it in response to COVID-19 and other things as well. But it's nowhere near the level that it used to be. And as a result of that, it's not having the same impact on the market as it used to. In the US, there's no federal level support for this market, really. There is state level support, and we look at that state by state in our reports. But there used to be a volume capped tax credit. Well, there still is, but it used to be applicable to Tesla and GM, but they've both exceeded the limit for that volume cap. And I'll show you a chart later that shows you the relationship between the change in that tax credit and the change in vehicle sales. And we're quite bullish for the US now, because obviously we're going to see a change in the regime from, I think it's the 20th of this month. And the Biden regime or Biden administration is making good noises about supporting this market through both fuel economy standards, but also we feel that there's a real opportunity to just reintroduce this cap with no limit, no volume limit, and that will really set the market off. But we'll come to that in more detail shortly. The other aspect of this is that, you know, you've got the short-term or relatively short-term easy piece, which is the subsidy and incentives. Governments can bring them in at relatively short notice, and there's an immediate impact. You have this ongoing background noise around the total bans of internal combustion engine vehicles. Big one in 2020 that was the change in the UK one, in fact, which was bringing forward of the ban till 2030. For us, where these are targets rather than mandates, where there's no legislation in place to enforce this, we take a relatively open view on these things. We say that they are targets rather than legislation. In Europe, the things that really matter for us are the CO2 targets and the Euro standards. So in Europe this year, we have the full phasing in of the 95 grams per kilometre CO2 standard. That's already had a big impact on the market as well. That's been a part of the reason why Europe has picked up, and a part of the reason why so many more plug-in hybrids and battery electrics are available now in Europe. And a reason why a company like Daimler is now going to hit the 95 grams target, because they are now actively promoting those vehicles so strongly. But for someone like the UK, they said that they'll bring forward that timeline to 2030. If you look at the detail of it, so much as there is, and there isn't much detail to it, you can still buy hybrid electric vehicles. So that's not plug-in hybrids, that's hybrid electric vehicles until 2035. To our mind, hybrid electric vehicles is still internal combustion engine vehicles. So the nuance in these targets is there to be seen. And also, like I said, really what matters to us is things that are in law, because it's very difficult to get these sanctions passed with all the different stakeholders that there are in these markets. But these give you an idea of when we should be moving forward. Coming back to the US, as I mentioned before, we're quite bullish on the US this year. In our upside case, in our forecast, we have a significant increase in the market, and part of it's because of this. So if you look back historically on the US market, there used to be a $7,500 tax credit. That went down to $3,750 in January 2019, and then it went down again to $1,875 from the middle of 2019. And that was limited to a certain number of vehicles sold by a given OEM. So there's a number of OEMs in the US that haven't reached this target yet, but Tesla, the main one, has, and so is GM now as well. The thing I wanted to point out from this historical chart is the relationship between vehicle sales and the rate of the tax credit. As you can see, before the end of the $7,500 credit, which is huge, we saw a significant uptick in sales, and we saw it again when the tax credit was going to get phased out altogether for Tesla towards the end of 2019. We think it's a very, very easy and quick policy lever for the Biden administration to pull to just reintroduce this credit without a limit. It doesn't cost anything in the near term. It's not a subsidy. Clearly you lose tax revenue over time, but we're talking about a very small market, and this is very, very marginal in terms of overall tax revenue, even from vehicle sales in the US. So we think that's a very obvious policy that the US government could reintroduce, and frankly, it would be supporting 2 local OEMs as well. So we see no reason why that shouldn't be introduced by a more, let's say, friendly government towards these technologies. The other thing is, in the US as well, the Biden administration is making very good noises around fuel economy standards. And again, that will have a knock-on effect over time on EV sales via a reduction in ICE sales. So those sorts of things are harder to introduce. They take longer, but they are good news overall for the EV market in longer term. The other thing as well is that the rate of consumer choice and quality in this market is improving significantly. So it's no surprise to anyone. I don't think it really upsets anyone to say that in the early days of this market, maybe the vehicles weren't as good as perhaps they could have been. The battery chemistries were still developing. And so what we're now seeing is very, very high quality vehicles coming in at a very, very good price, a competitive price, especially when you consider subsidies and the operating cost for these vehicles compared to internal combustion engine vehicles. Now, what I will point out is that China leads the way in this. So China, like I said, has lost ground to Europe in terms of overall vehicle sales, but what it still leads on is variety and consumer choice, and that actually feeds through to battery chemistry as well. So in China, there's something like 200 models. I mean, this is give and take. This is up until the end of November. We had this is the number of models, unique models sold, battery electric and plug-in hybrid electric for passenger car in China. So it's nearly 200 by that point. And the range of vehicles sold is significant. So you've got everything from the very high end to the very low end. You can buy a pure battery electric vehicle in China for $5,000 US. In fact, it's one of the best-selling vehicles in the months that it's been released. In fact, in some months, displaced the Tesla Model 3 in China in terms of best-selling. It's got a 13 kilowatt-hour battery, LFP. That suits a particular type of driver, a particular market. In Europe, we're seeing this ramp up significantly in 2020. Many more models be released in 2021. A good portion of those are plug-in hybrid, it has to be said, but we are seeing, cheaper vehicles coming in, also higher-end vehicles as well. So you start to fill those market niches that will displace internal combustion engine vehicles. In the US, we're much further behind in terms of that. It's basically GM and Tesla, and the rest of the world is similarly as well. But that's the thing to watch. One of the things to watch out for this year. See, the quality and the range of vehicles coming into this market will set off sales because they start to fulfill market niches that we haven't fulfilled before. But what does all that mean in terms of pack size? Well, I'll tell you what it meant in 2020, and it will mean something quite similar in 2021 as well. So people seem to have this idea that there's just this exponential growth in pack sizes over time. We don't think that's true for a number of reasons, but in 2020, one of the reasons was because if you look at the share of battery electric to plug-in hybrid electric in vehicles in Europe, that really brought down average pack sizes over the year. So just to explain this chart maybe a bit more slowly, because there's a lot going on the left-hand axis, you have the percentage of vehicles sold in terms of battery electric versus plug-in hybrid electric. On the right-hand axis, you have average pack size. This is for passenger car and light-duty vehicles only. And that it corresponds to the red bar on each chart. So working through left to right, the US market is roughly 80% battery electric versus plug-in hybrid electric. The average pack size is roughly, I think it's around 55 kilowatt hours. In Europe, it's roughly 50-50 battery electric to plug-in hybrid electric. The average pack size, corresponding pack size is then a lot lower as a result of that. In China, it's about 75-25 in terms of the split. And the pack size is higher than in Europe, but lower than the US. And that's because of these very small vehicles that you can buy, battery electrics that, 13 kilowatt hour battery pack sizes, 14 kilowatt battery pack sizes in China. So that's one thing to bear in mind. And then coming back to this point I made about, will we see exponential growth in pack sizes? Well, in the near term, we expect that the split of vehicle sales will be roughly equivalent to this in 2021. So no in 2021, but also things like the better rollout of charging infrastructure longer term, battery swapping, which is a bigger deal than people realize in China. The fact that some of these the vehicle sizes will become more diverse over time means that there is a balancing effect of the larger vehicles getting bigger battery pack sizes and the smaller vehicles getting smaller battery pack sizes. There is a balancing effect of that over time. But this dynamic of this split of battery pack sizes will hold for 2021 based on the vehicle lineups and what we expect to see in each market, based on what OEMs have told us personally and what they're putting in the public domain. So what does all that mean for battery chemistry, for those of you who pay attention to that? Well, what this chart shows you is this split of battery chemistries deployed. This is from our monthly work and also some of the forecasting we've done as well for 2018, 2019 and 2020. This is for all vehicle classes. So this includes buses, which is why you have a decent share of LFP in there for the previous years and also for this year. So let's just look at 2020 and work from the bottom upwards. So the bottom part of the chart is NCM 811. In China, that is roughly about 20% of the market now for all vehicle classes. It's higher for passenger car and light-duty vehicles. That's something we actually predicted accurately at the beginning of last year. And one thing you notice in China is that new battery chemistry developments happen a lot quicker. They come to market a lot sooner than they do anywhere else in the world. The next step up is to 62, and we've included 712 in there as well, because some of the high profile releases in Europe have been 712 this year, the ID3 being the most obvious one. That share has increased significantly last year, and we expect that to continue for 2021. The reason for that is that virtually all the new model releases in Europe for battery electric are either 62 or 712. Very little 811 being offered in Europe, and that's around concerns around cycle life and battery safety and fires and so on. Still have a significant share of 523 in there, which is the next block up, which surprises people actually when you tell them that. But that's around the plug-in hybrid piece as well. So the vast majority of plug-in hybrids are 523. There are other chemistries being offered, including 811 in some cases for plug-in hybrids, but the vast majority of 523, and that's what keeps that share there. 111 is really a legacy cathode. It's actually used quite significantly in hybrid electric vehicles, so it's not plug-in hybrid electric vehicles. You need that extra cobalt in there because of the rigorous charging and discharging cycle, but that's really just older vehicles being phased out. NCA in there is basically all Tesla, virtually all Tesla, and it's virtually all the US as well. And then you have LFP in there, and that, the reason that share is so big in 2020 is because of buses, but also it's, as I mentioned earlier, it's being used in smaller vehicles in China already. That will happen in Europe, probably not this year, but maybe 2022, and it will eventually get to the US as well. It's a very good cathode choice for low-range vehicles in the passenger car segment. It is actually being used for larger vehicles in China as well, but in a more limited way. LFP has come along a long way in the last couple of years. We now have what's called cell-to-pack technology, of which the BYD Blade is a prominent example. That's being used in some fairly large battery pack sizes. That, because you're reducing the weight with not having the module there, that increases the energy density overall on a gravimetric basis, and then increases the range of use cases for that cell chemistry. Now, again, that picture is not going to change very much into 2021, we don't think, because the model lineup's already set and you have some visibility there. We will see more 811, we will see more diversification of cathodes. Expect to see the introduction of, in a major way or in a significant way, of NCM-A, which is effectively the NCM cathode blended with manganese, blended with aluminium oxide to increase the stability there of a high nickel cathode. On the anode side, the key trends are expect to see greater blending of natural and synthetic anodes there. That's already happening. We expect that to continue. And the increase in the share of silicon dosing in higher end vehicles this year. So, moving from 8% slightly higher in some of those vehicles as well. So we also track the anode piece as well in our monthly work as well, but won't go into too much detail on that here. Now, I've been talking for a while now, so my contact details are apanayi@rowmotion.com. You can follow us on LinkedIn. It's just Rowmotion. We put up some charts there, similar ones that you would have seen in this presentation on a regular basis. If you have any questions, please get in touch. We're also on Twitter as well, so please follow us there as well. And I'm happy to take any questions from you either now or later.
Thanks, Adam. Could we touch a little bit more on the American market? Sure. With regard to the obviously the flatlining, if you like, on the $7.50 route and the restriction for GM sales? You mentioned that that's likely to be removed altogether. That could give a tremendous amount of increased sales in that sort of more affordable market, if you want to call it that, yeah, from Tesla. What's your view on that? You've touched on it, but a little bit deeper in terms of the other vehicle manufacturers coming on board with it as well.
Yeah, so the other vehicle manufacturers outside of GM and Tesla, at least at the moment, are not affected by the cap because they haven't hit the cap, but they would, fairly quickly, one imagines. So the thing is that the administration has two options, or has two major policy boxes it can delve into. One is on what you might call legislative and longer term stuff side of things, which is around CO2 targets, fuel economy. On the diesel side, it'd be nitrous oxide, but that's not really a big issue for the passenger car market in the US. That takes time, and writing legislation that has to get passed through the various administrative bodies there takes a while. But that has a longer term effect and a more profound effect longer term than, say, the other policy box, which is around subsidy and incentives. But those subsidy incentive policies, you can pull them out quite quickly, get them into the market quite quickly. So we feel that it's an obvious one is to reintroduce that tax credit with no volume cap, because for the reasons outlined in the presentation, there's no upfront fiscal cost to it. It's not like a subsidy; you don't have to pay anything out. It's just a foregone tax revenue, and a fairly small one, frankly, as well. So we think that could happen quite quickly next year. I mean, there's been no noise to say that it would, but it just seems obvious that they want to support this market. That's an immediate way to do it.
Also, going on, I want to move across now to China a little bit more.
Sure.
Battery swap. How practical and viable is it?
Yeah, that's a good question. So it's the main proponent of it for the passenger car market at the moment is NIO. They passed 1 million swaps in late 2020 rather. It happens a lot already in places like India for the 2- and 3-wheeler market because accessibility is easier for those batteries and they're less complicated. Okay, so there's a couple of points to this really, that the vehicle design has to facilitate it. So the reason why NIO can do it is because they've built those vehicles to be able to do that. It's practical as well because they track where the vehicles are sold. And if they see a particular build-up of vehicles sold in a given region or a given neighborhood, they'll put in a battery swap installation to serve it. And so that's worked very well. But clearly, if that's going to go mass market, then a couple of things need to happen. There needs to be better tracking of where vehicles are being sold and so on. I'm not talking about China specifically, but worldwide. Also, vehicle design would need to be able to accommodate that and accommodate that safely. At the moment, that's not happening. So it's really beyond NIO and a few others. It's not really likely to happen outside of China, but it could in the future. And it serves a purpose in the sense that it solves a couple of problems. In that it means that you don't have to drive around. Well, one, you don't have to worry about charge time anymore because that can happen at the charging station and the swapping station. The other thing is that you can start to reduce pack sizes and reduce cost as a result of that, because all of a sudden range anxiety is less of an issue. One of the things you can do now is that if you're a NIO driver, you can drive in and get a larger pack size than you had when you bought the vehicle, and you just pay an increased effectively rent on that larger pack size. So it means that you have greater flexibility in terms of what you can do with the vehicle. If you know you're going away for the weekend, you can get a larger pack size. If you know you're just going to be in the city, you can get a lower pack size and just pay the differential on that as well. So I think it's a good idea. We know some European OEMs are looking at it because they've told us. They haven't really made any forward steps towards it yet, but it's an interesting proposition, I would say.
Coming much closer to home, and our 2030 sort of requirement,
yeah,
excuse me, which is now only 9 years away. So that's quite a sort of ambitious target. But are we moving away for people from this range anxiety? Because we all look is probably the wrong word, but people look to the maximum distance they can get without a charge. And a charge is not a charge, but a fill-up is pretty easy when you go to a station. You can go from no miles to 300 miles in about 5 or 10 minutes of fueling.
Yeah.
Is range anxiety a problem anymore, or should we not be addressing more recharge? Shouldn't it be all about how we can recharge, where, when, and how quickly?
I mean, there's sort of two sides of the same coin in some respects. The reason why range anxiety is still an issue, I think it still is because the charging coverage is not potentially what it should be. And in fact, if you look at somewhere, we do a lot of work on charging and what will be rolled out and why and so on and where. If you look at the most developed markets, leaving aside China, but say in Europe, so Norway, which has over 50% penetration of battery electric and plug-in hybrid electric, it actually has the worst ratio of public chargers to EVs of anywhere in Europe. In the US states individually, California has the worst ratio. And that's because the EV market tends to take off sooner in terms of volumes than the charging market can keep up. And that's partly because fast chargers particularly, are quite difficult to put in terms of, you have to dig up forecourts or dig up parking lots and so on. And so there's always this lag. That hasn't mattered so much so far because of the demographic of people buying those vehicles is largely been people with access to a driveway so they can charge at home. But that will change over time as the vehicle mix changes. And if you look at China, actually the ratio is something like, I think it's about 6 EVs to public charger in China. And that tells you something about the demographic there as well, because much higher urban density, much larger number of people as a proportion living in apartment buildings rather than single family households. And as a result of that, and also the fact that the government can move things along quite quickly from a charging and infrastructure point of view. Whereas if you look at somewhere like Norway, it's over 20. So it's a very long way of saying that as charging infrastructure catches up with the EV market, range anxiety will go down. That's a long story though. That's a 5-year story, I would say. And a lot of money has to be spent before then. So I don't see that issue going away. And as a result of that, pack sizes in the larger vehicles will stay large for a while.
Okay.
But there's a lot to cover.
There is a tremendous amount, and you've covered it. Thank you. And also a lot to take in, and especially when you start looking at the chemistry side of batteries. Is it possible for people to actually contact you privately? Because I'm always asked about
Yeah,
this.
it's fine. Yeah.
Obviously, using the site anyway, they have the ability to request to connect with you, and then they also have the ability to ask you questions and you to relate back. So we can do that. Thank you very much for your time. We've managed to stay within that half an hour block, which I think is great for everybody. And of course, this will appear on demand, most probably later today. So people who haven't viewed live will get the chance to view again, but also have the opportunity then to actually connect with you, any questions from afterwards.
Yeah.
So thank you again. Obviously, we're going to be calling you again for the future. Let's keep safe and keep pushing what's the vital segment moving forward. We want a good, cleaner vehicle and an environment to live in as well. So thanks, Adam. Wish you well. Take care. Thank you. Bye.